Hi, welcome to Beat the Market. Today I'm just gonna talk about gold a little bit, a couple little stock picks I like, and yeah, just what's happening. What's really happening right now? Not a lot. The U.S. is tapering, although Yellen is quite dovish in her comments. Seem to hint that tapering could be extended beyond March. We don't know. I'm hoping it stays on the March timeline because it should correspond with a good drop in gold around March, around that time period anyways. So yeah, let's see what's going on. Oh, another thing. The Europeans, after dragging their feet for how many years, are finally quantitative easing. Oh my goodness. You know what? So you're gonna see the same type of thing happen in Europe as you did in the U.S. So you can't officially say that European recession is over. They will come out of it. It'll probably be slow growth, but hey, that's how it goes in this day and age. So if you're looking at forex, I'd definitely be buying the USD, be shorting the euro. Especially against the U.S. dollar. That's also. So, that looks like a good trade because that just started to come out, last week really? About the euros QE, printing more money, more euros. That's good. Anyways, let's go to the gold chart. So here we have the gold chart from 2005 all the way till now. I wish I could have pulled it up from 2002, but it doesn't really matter because this is the big overall trend line. Something happened this year. Basically, it broke down. Boom! That multi-year, 13-year trend line broke. That is significant, if you're asking me. So, where's it going? Where's the market going? People have said it's bottomed. Well, it could have bottomed. Let's do some drawing here. Some Fibbonacci. And I'll show you what some people are looking at. A lot of people are taking this bottom here in the market and extending it to here. And they get a perfect retracement, 61.8 retracement right here, and it's boom, done. But you and me know that because trend lines are a lot stronger than Fibonacci retracements. They work really well, but let's take this off. Let's remove this because we don't want it here. We want it to move it. There we go. So there we go. Don't use that one. We'll bring the Fibbonacci that I'm going to use from here. And really, we should be starting this from all the way from 2002. But since we don't have the trend line from 2002, we won't. It doesn't really matter because this is the main trend line. It actually steepened after the first 3 years. It just sort of got going and then really started steeping here. So this is the important trend line anyways. And if you pull the anyways, so let's look at the Fibonacci. What do we got? Well, Fibonacci says GLD can go all the way to just about 95 or just under $1,000. Oh, well, let's look at some support. So 4 years ago, I wrote an article when gold was breaking out about $1,000 that it was breaking out and it was time to go, and it did. Boy, did it ever go. So let's find some lines here, a horizontal line. And that's the area where it was breaking out. It was forming a nice little triangle, a little wedge, I call them whatever you want to call them. And boom, broke out, and it was a great two and a half years. The last 2 years, not so good. But hey, that's just what happens in the gold market, doesn't it? So now you have a huge resistance at 1,000 that really took a long time to get through. It took 18 months to get through it. And then you also have Fibonacci right there too. So you know what that tells me? That tells me that after breaking this trend here, which is a huge trend, that the trend is now down. Let's see if we can get a line here. We don't want that line. Anyways, so most likely you can see this trend going down to here. That's probably where it's gonna end. It might bounce off there. Now, if you're gonna pull out Fibbonacci from 2002, you might see the 61.8 retracement come down to about 71 or 85. And there's a calculation to it. It's really easy. 61.8 retracement of the run. So if it was approximately 300 to 1800, that's 1500, and you divide that by the 61%. So times 0.618 equals 927 minus 1850, let's say 1800, and you're looking at $800 or $900. Minus, you're looking at, yeah, about 900, somewhere between $800 and $900. So that's if this doesn't hold. That would be your ultimate target, and it could be, because this area right here on that would be about 50% retracement. So yeah, there you go. So moving on to another pattern we see here. I like this head and shoulders pattern we got, and it's showing you, well, it's the topping pattern as in from this bottom right here. It comes up and it looks like it's going to come back down. So you got the 20 moving average, day moving average right there. You got this overall trend line coming down there, and you've got the neckline right here from the shoulder, right? The neck in between the head and the two shoulders. This looks like it's going to break. At any rate, it's forming a wedge. And as this continues to form, gold's probably going to be range bound for a little bit longer, but I say it's a pretty damn good short above $1,300. So if you can get above $1,300, great short. And when you look at it, once you break the 1250, that's your signal for further momentum downward. You know, it's easy trade, easy momentum trade. You could just make big bucks. You know, take 2 mortgages out of your house and just go all in. No, I'm just joking. Don't do that. Anyways, but yeah, it's a good trade. I would definitely go there because no one wants gold right now. Everyone wants bitcoins. No one wants gold. Why? Because you can spend bitcoins. You can't spend gold. So there, we've gone through that. We've gone through the gold chart. What else do I want to bring up here? Oh, new stock. New stock.